Real estate, the oldest game in the world. But what if I told you the next property boom won't start with bulldozers or brokers? It will start with blockchain. Today, I'm sitting down with the CEO and founder of Building INC, the people trying to turn buildings into tokens. We are talking about how we could one day own a piece of skyscraper the same way you buy a crypto coin. And we are talking about the insights of RWA, real world asset, the next hyping narrative of crypto. We are also talking about reality of meme coins and Donald Trump, who has created his own meme coin. So watch till the end and let's get started.
Hey Matthew, welcome to the show, man. How are you?
I'm doing pretty well. Well, I guess it's evening time for you, morning time for me. How are you?
Yep, yeah. I'm good, I'm good. Thanks for asking, by the way. Matthew, I've introduced you to my audience, what do you do, who you are, and I guess like we have to jump straight in the questions building INC. So, why do you call yourself like the digital, standard of the real estate? And what exactly does that mean to you? Like, can you explain a little bit, like your point of view?
Yeah, absolutely. I've been in blockchain and real estate for going on almost 6 years now, 5 to 6 years. And I've got to see both of these industries evolve. And I've been exposed to all the problems that exist in them, some of the solutions that come out, and then how blockchain as a technology is being used to enhance real estate. My first startup, we were focusing on tokenizing the ownership, creating tokens so that investors could buy shares of real estate. And then I pivoted 18 months ago. Well, I exited that first startup, pivoted into data and other portions of the real estate industry. And the reason why I did that is because I realized there are some deep problems in the real estate industry and
Mhm.
digital assets and RWAs. And there's quite a bit of overlap, actually. The common denominator, the big problem that both industries are struggling with is data. Real estate data is not being digitized or captured. It's often not trusted. And RWAs or tokens and digital assets, they struggle with data, performance, risk, transparency, and then connecting that to the real world. So I took my years of experience in both industries and decided that I would try to tackle this problem head on and be the solution that connects real world data to tokens on chain, try to create an infrastructure for that so that as things happen with real estate in the real world, maybe it's being developed or repaired, you have tenants paying rent. As those changes happen, it's reflected on chain. Right now, that just happens with cryptocurrencies. We have the dashboards and the metrics for cryptocurrencies, and we can see them go up and down in price. We can see their market cap and data about them. But for
Yep.
tokens of real world assets, that doesn't exist. So, creating that infrastructure, creating a way for real world data to get on chain reliably, to turn that into value and valuations. But there has to be a process to doing this. You can't just do it anyway, especially if you want to work with institutions. So we
Yes.
realized we need standards. We need to standardize data and valuations and compliance. And that is what building specializes in. So, not so much creating tokens, but creating the framework for tokens.
Mhm. Got it, got it. Man, that's huge stuff. I gotta tell you, I think so. Your favorite crypto narrative might be RWA, isn't it?
Absolutely. It is.
All right then. I'm gonna ask you hot take question. Like, what is your favorite RWA, token? Like in general, there are many. Few of them are of IPs, like intellectual property, and few of them like they claim to buy properties. Few of them they claim to. So like you can tell me your take. Like, what do you see in RWA if you're investing in any RWA project, or like how it goes for you?
Well, I think the most opportunistic RWA is tokenized real estate. However, it has a very long ways to go before it's ready for real transactions, collateralization, trading on secondary markets, institutional capital. And that's just because real estate is an offline industry. So a lot of the RWA or real estate tokens that are out there don't really represent true ownership or accurate appraisals of the property. There's this big disconnect. So I like it, but it needs more time. I think some of the best RWAs right now are bonds and money market funds. They're just super easy to tokenize. They're already liquid
Right.
markets,
Yeah.
very transparent value, and the companies that have spearheaded those tokenization initiatives are institutional grade. So those seem to be the strongest RWAs right now. I've seen some other use cases: tokenized blue chip art, tokenized ownership in wine barrels or
Right.
diamonds. Some of these I'm not so optimistic about, but
Yeah.
they're still cool. It's a
Cool.
demonstration of the
Yeah.
technology, I guess. But
Right.
yeah, it's the
Uh,
digital stuff that's the best right now.
recently I did a podcast interview with Kenny Jones. Like, he's the founder of a RWA project named Ample Protocol. So it's all about IP, like intellectual property, like musics and all that, ideas, patents, and logos, franchise itself, like the movies and all. He told me one thing, like uh, meme coins, right? So for the meme coins, he said like he see the meme coins as a brand logo. If that works, then works. If it goes to shit, then it goes to shit. What's your narrative? What's your take on the meme coin? Like, nowadays, if you see, that's crazy narrative, pump fun, and there are four meme for the, I mean, BNB chain. There are a lot of meme coins in the market. Like, can you tell about your stuff? Like, how do you think, like, if there is any person wanted to invest in meme coins, what they should see in the meme coin first? Like, do you in general like meme coins, or you're all in an RWA project?
I'm all in RWA. I'm quite anti meme coin. I know that people have made a lot of money off of it, and so they're going to be advocates
Yeah.
for it. But
Hmm.
meme coins are the one thing holding this industry, this vertical, back from being taken seriously. The reason why
Hmm.
governments are anti blockchain and regulate blockchain transactions are because of meme coins, generally speaking.
Yeah.
Or you could
Hmm.
open that up to just unregulated coins. In traditional finance, meme coins still existed, technically. They were over the counter stocks or penny stocks, little companies that would claim to have invented a cure for cancer or something miraculous. And then you would have sleazy salesmen who call up brokers and the working class and get people to put their money into this and then rug it. And now that is just in the form of a Pepe coin or Dogecoin. So
Champagne. Yeah.
it's disappointing to see that we are still gravitating around meme coins when it's just a reinvention of the type of corruption and manipulation that we had
Yeah.
already regulated and gotten away from in traditional markets. We were very intentional about what investments were allowed to be sold, and now it's like we don't care anymore. People are willing to just sell anything
Yeah.
and label it anything. And for some reason, people are still putting their money in this, even if they lose
Hmm.
95% of their investment and
Yeah. Totally.
95% of the time. It's like, what's the point?
Yeah, understandable. That's true. I guess like meme coins bring a lot of attention to the market. I get it, but it makes crypto a little bit unserious. Like if you ask some for 40-year-old, dude, like if they wanted to invest in crypto, what do you see first? Like meme coins, some, dog, cows, monkeys photos. So yeah, that's the stuff. Okay, so real estate is the one of the most heaviest regulated industry. And how do you plan to bring blockchain transparency into the space where regulation often slows down the innovation? What do you think? In your case, does it really slows down or?
So the first way that we use blockchain actually is not regulated, which is
Mhm,
great because it allows us to experiment with the technology and show its value without getting into trouble with regulators or the law. And the way that we go about this is as we digitize paperwork or documents and workflows, we can start to give things a digital fingerprint or timestamp using the blockchain. We call this anchoring to the blockchain or a SHA-256 hash. And what this
mhm,
does is it shows at a moment in time the state of information. So if you and I have a contract between one another, and let's say it's not a
mhm,
smart contract, it's a paper contract or a PDF contract, it's not ready to go on the blockchain, but we can at least give it a fingerprint using the blockchain. And so that document at that moment in time with our signatures on it, on this exact time, that this date, the people who saw it, we can still lock that in. And this is useful if other people are looking at our contract and they're wondering, is this the real contract? Is this a duplicate of the contract?
uh,
Is it a
right.
manipulated version of the contract? And not only does that give them more trust, more authenticity, or reliability of the information that we're handing them, but imagine
It,
that we go to court, then it's very high stakes being able to authenticate information. So
it,
that's a non-regulated way to use blockchain in an antiquated industry, just as this determiner of trust and transparency. And then the
mhm,
second way is the regulated ownership method, which is you're taking equity,
mhm,
debt, perhaps, or in some cases down at the deed or the title of the property itself, and you're putting that on chain and transferring it. But I, we advocate for that. We work with that, but we don't do that directly because it is regulated. So we work with partners who are SEC licensed or whatever jurisdiction we're working in to handle that. So we support it, but we don't do it directly, just so that we don't have to
yeah,
do all the
right.
regulated stuff.
Yes, get it. Uh, I saw like on your Twitter, you do strategic partnership with RW project itself, right? Partnership and sort of. If any, by watching this podcast, if any RW project or any project wanted to do a strategic partnership, if they wanna, increase their leg up, what they should do, like what's the first thing like they should do?
Well, with any strategic partnership, you're going to be looking at what gap you have in your company. What need do you have that someone else is going to be fulfilling? And in our case, we recently announced a strategic partnership with a company called Magma. And I do believe that they have a token launch coming up in the future. We, on the other hand,
Mhm,
don't have a token. We're a mostly Web 2 company using Web 3 technology.
yeah.
But they work with digital twins or 3D models. So we work
Mhm,
with real estate data, creating the standard, valuation, compliance. One thing that I think is really cool is if that data can be visualized. And so I saw that this company was working on that, that Magma was working on that, reached out to them, and we put together that strategic partnership. And they likewise are both a Web 2 and Web 3 company. So it was a very synergistic match. It's very valuable to both companies, I believe. And we have strong brands, strong teams, strong initiatives. So for
mhm,
any company that is pursuing some sort of strategic partnership, you have to have a very good reason. And then you need to be picky about what companies you're working with. Why exactly do you like them? What
Mm-hmm.
value are you going to reciprocate to one another? And then
Right.
some of the terms as well. Are you going to become dependent on them? Is there intellectual
Uh-huh.
property involved? Is it expensive? So you just got to be really careful when you think through that. But done right, this is how you grow very fast.
Oh, cool, 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 cool. So, if there is an advice like you should give to, like, if any RWA project which are not good, doing good in the market, because I feel like you have a lot of experience in skepticals like of RWA and I mean real estate and all. What advice you should give to the project who are not making it in crypto? The RWA, they are since they are working since years now and they are not making that success, what advice you will give to them?
Well, it's general startup advice. It doesn't have to be specific to RWA. With any coin, company, whatever, you have to be solving a problem. If you are not solving a problem, then no one is going to pay you because your solution is not needed, and therefore you
Mhm.
don't have a company. A company is when you're selling a
Right.
solution, and people are depending on you and you grow that service. So if you have some sort of project, whether it's in web 3 or web 2, and it does not have a solution that is needed, I don't know what to tell you. Pivot, I suppose. Like, find a solution that is needed. Think about what people are willing to give up their hard earned money to receive.
Mhm.
And while you can be distracted by hype and say, well, I'm trying to create an RWA token that runs up and a lot of people are buying it and we're circulating it and there's going to be all sorts of rewards, that's
Mhm.
hype. That's not a true solution. There's no
Mhm.
longevity in that. And that's what we're seeing right now, where there you don't want to be a token that's going to be pumped or a company that is just hyped up and then dissolves. We already went through
Mhm.
those cycles. Now you should be thinking about, how do I build something that can withstand the next 10 years, that we have
Mhm.
growing customers, that we have customers who advocate for us and need us because you're like medicine for them. They need you for their own businesses. So that's a perspective that you should have. I think people should be thinking long term and not just about the money, about the problem,
Mhm.
about improving the industry, improving the world.
I get it. Matthew, it's a huge take for few of the owners of crypto and founders of crypto projects, and a lot of guys will be disrespected after this podcast, but I really like it. You know what? Are you going to make your own token in future? What's your part in it? Like if you are, or you're planning to, or it's no for general.
For the most part, it's a no, because we don't need a token for the service that
Hmm.
we provide. We are
Right.
supporting tokens and the tokens that are being created for RWAs and helping to standardize them so that they can be trusted, so that they have ratings and they can be transacted at any point. But we ourselves don't necessarily need a token in order to
Hmm.
function. And I think that's the right perspective. There's a lot of companies that create a token even if they don't need it. And that's
Needed,
such a
yeah.
distraction. You should create a token if you absolutely need it. Otherwise, just focus on building your business and solving a problem.
Hmm.
Tokenomics and community managers and price action and your market cap and trying to sell
Yeah.
your token everywhere you go, it's too much. Don't worry about that.
Yeah, that's a part. Ah, that's a great part, by the way. Um, when someone buys a real estate token like RW token, what actually they are owning, like a piece of property, share companies, or digital promises, or most of the times, I feel like it is digital promises. There are a lot of RW projects. They're all floating in air. Like old grandpas used to say, like, "Hey, crypto's all air. It's nothing. Buy stocks, some stuff like that." And nowadays, I feel like most of the times because of the states, United States, because of Trump, yes, like there's a lot of acceptance in among people, and I believe like there are a lot of people will be coming in crypto just because of the acceptance and adoption, and there is a lot of attraction coming on just because of RWA. Like they think like this is the new real estate. So what do you think? Like all RWA projects are just digital promises, or it does really do stuff?
Well, it absolutely does stuff. RWAs are the real deal, in my
Hmm.
opinion. Now, they are not all designed the same. So some RWAs will claim to be ownership of something in the real world, but they are not truly ownership. And that's a big issue. So there needs to be more transparency around what an investor actually owns and receives, what their rights are to that underlying good in the real world, and ensuring that it's contractually sound. Because just because you buy a token that claims to be backed by something in the real world, if the courts don't recognize that, then they will not recognize your token, and therefore you don't have true ownership. So that's a big issue. You not only need regulators, but you need courts to recognize the rights and ownership of the token that you are purchasing, whether that's deed rights or equity, debt, revenue share, intellectual property, whatever that is. You need to ensure that it's guaranteed by the law. And right now there is just no reliable standardized way to do that. You can buy
Mm,
tokens that don't have real representation, you won't receive any money. So we need more frameworks in place to guarantee RWAs to ensure that they are trusted. Because if someone is investing in real estate, they know that this is a very stable asset class. You can put a lot of money in here, use it as a bank almost. It will appreciate, it will pay you dividends, you get the tax benefits. You just park your money there. But if I were to park $10 million into something that's claiming to be real estate and it's not, and it has volatility, it has illiquidity, it has ownership rights issues, it's not recognized by the courts, that's a lot of money to lose. And then people will say, I don't want the tokenized version of this. I will just go the traditional route. So you have to build up trust frameworks with RWAs in order for people to put their money into it.
that's good. I mean, like there should be a thing like it, either it should be legally accepted. Otherwise, people will feel it's all air. It's nothing. Like they are just doing fake promises. Uh, since you're based in Phoenix, right?
I'm in Atlanta, Georgia area.
Oh, all right. So how's the real estate laws and your ability to tokenize asset over there? Like, are you forced to structure things more like the security, than crypto token?
Yes. So if you want compliant tokenization of real estate, it's going to be a security. And this is
Right.
governed at the federal level, not by the individual
Mm-hmm.
states. So for everyone in the United States of America, you will be classifying your tokens of real estate as securities. And there's certain rules that come with that. Usually, who can invest, when they can invest, how they can transact that ownership, the type of paperwork the owner or the creator of that token has to file, and then there's costs associated with that and attorneys. So
Right.
being regulated, it doesn't make things more complex, but it could make them more
Mm-hmm.
difficult. And difficult
Right.
because there's costs and nomenclature
Mm-hmm.
associated with it. So, in other words, you have to understand the paperwork, the exemptions, you have to get that right, or you could face consequences.
Right. Totally understandable. Fast forward, I just wanted to know your future vision. But before that, I can ask you, I remember, like you said, like you're a little bit anti-meme coin. Uh, what do you think? Like the Trump family do have to create their own meme coin,
Mm.
or they don't as a serious president?
Well, yeah, there's nothing serious about this administration, from posting terrible memes on Twitter to awful policy, and then creating these meme coins, essentially these family coins that are
Mm-hmm.
unregulated, selling them in mass, promoting them at events. There's hundreds of millions of dollars that have been made off of this illicitly.
Yeah.
So that's an awful issue. We would call this corruption on any level. It doesn't matter what country, it doesn't matter who. It's corruption. And I mean, you think about Jimmy Carter, who had to sell his peanut farm because it was considered a conflict of interest to have a business while president. And meanwhile, we have this president who is still running businesses and his family members are, and then the crypto component. So it's like completely unregulated. It's this. I mean, it's a pretty disastrous admin. I appreciate the relaxation of the SEC around crypto, but I think a lot
Mm-hmm.
of it was not done to advance the industry. They don't care about the innovation. They don't care about creating some sort of efficiency or transparency. They just saw that this is a new way to gamble, a new way to create coins that bypass the traditional guardrails that we have in place so that people can't just create fake companies and steal money from people. For some
Mm-hmm.
reason, we have gone completely backwards and said, no, actually, it is okay to create fake stuff. It is okay to take money from people who are gullible to
Mm-hmm.
buy whatever we're selling, and then doing that over and over and over again. It's
Right.
these are crazy times, but there's probably going to be pretty big consequences for it.
Yeah, I guess Donald Trump doesn't have to create his own meme coin. Like there's another First Lady coin, like Melina coin as well.
Mm-hmm.
That sets apart, as as the people who live in states, like they want like more of people thought like. Actually, I'm gonna say it like Donald Trump claimed like he was going in Bitcoin conference. He say like we Bitcoin is going to the moon. He's just saying good stuff about crypto and all that stuff. He attracted all the people who are, crypto friendly. And there are rumors that, the traders of crypto, their taxes will be free if you're into crypto. This rumor is going for a while now. I believe like there is some higher profile people who controls the narrative. Like what should we spread the rumors? Where should we go? Where is the people? So yeah, that's what I think as well.
Well,
Um,
yeah, you're correct. There's a lot of insider trading that's happening right
yeah,
now, and we know this for a fact because we could look at the recent Bitcoin crash, and
right.
just moments before Donald Trump sent out
Some
his tweets about tariffs, yeah, people were opening short positions, a massive short position. I'm pretty sure it racked up $100 million or something like that. So how do they know to do that at that scale right at that time?
Mhm.
That's clear manipulation.
Yeah. I'm gonna ask you something more. Like Jim Cramer, right? So
Yes.
why do you think he predicts like sometimes, I guess, like 75% of times, like why do he predicts like the opposite? And why do he know stuff? Like what do you think? As he is the part of that, crazy high profile stuff, or uh what people nowadays say the matrix, or what is it?
Well, I think it's the exact same reason. Anyone who has exposure, anyone who is high profile, recognizes that they have power to influence the masses or to create a narrative and get people to
Hmm.
accept it as fact and buy into that. And so you're just seeing that. It doesn't matter if they're pro crypto, against crypto, if they
Hmm.
say that they're buying something or selling at this time, it's to encourage other people to do the same and then sway the market. Or they could be attempting to, it's like a red herring where they say, I'm going short now. They wait for people to sell and then they go long, right? They were trying to get in at a better price. People, I mean, high publicity is politics essentially. That's what this is. It's all about how you can maneuver other people, other businesses, use your words in a strategic way to get what you want, and it just trickles down into cryptocurrency.
Yeah, like huge power comes with huge responsibility as well. Okay, fast forward for the 5 year vision of RWL. What does the real estate market looks like? If if the tokenization wins, um, are realtor out of the jobs or just an upgrade to the Web3 agents? Like, what do you think about this?
Well, realtors would handle the full transaction of a property, and they work with title and escrow companies in order to transfer the outright ownership. But then there's also the investment into these properties, which is the equity and the debt. I
Hmm.
think that is going to transform first. We're already seeing that happen. However, it won't be obvious. It will happen in the background. So I think blockchain is a technology that is great, but it's mostly behind the scenes if you're doing it right. So if you're
Hmm.
investing into real estate in the next 5 years, it might be tokenized and you don't even know that. You might have a wallet, you might have a wallet that is set up for you. You will be buying shares or investing as a limited partner into a real estate deal. And what you will see are the benefits that blockchain could offer. And I think that's what we're trying to pursue en masse. Could there be more transparency, lower risk, better pricing, better liquidity of this asset class once it's been digitized and tokenized? But
Hmm.
the end user doesn't really care if it's been digitized or tokenized. They just want to know I can sell my real estate whenever, I can receive money for it, or I can take out a loan against it. And they'll see those benefits emerge and be pleased with that. On the outright ownership side of it, so title and deed, there's I would say in the next 5 years there's not going to be much change in the
Hmm.
US because we have a very fragmented market, but other parts of the world are leading in this area. So we know that the Dubai Land Department and VARA
Yeah.
recently allowed tokenization at the deed level. And so in jurisdictions where you have top-down authority like that, you will see some pretty revolutionary tokenization happening.
Hmm.
And I think that's going to bring a lot of attention. It's going to bring a lot of assets on chain. And then maybe we will start to meet some of the tokenization goals, some of the numbers that people have been talking about. They say RWA is going to be worth $14 trillion or 30 or
Yes.
whatever, these huge
Yes.
numbers. But then if you look at how much we've actually tokenized, it's this tiny, tiny amount. I put out a post recently. We would have to tokenize 1,000 times as much RWA right now. So,
It's like
I mean,
concrete,
that
bricks,
that that just
property,
tells you how,
building.
yeah, it tells you how far we have to go in the next 5 years in order to meet goals. We have to go 1,000 times faster. We need to be tokenizing 1,000 times more in order to reach these 2030 goals or estimates that people have been announcing. And they were
Right.
mostly announcing that for the reasons that you and I were just talking about, which is a lot of it is publicity, it's politics and marketing.
Mm.
They're just trying to bring attention to this industry or their projects. So I think they were a little too ambitious. I don't know if we'll meet those numbers unless there's something that comes out of the blue and suddenly all the real estate is getting tokenized. But right now,
That will be
it's
pretty
not the
hard.
trend.
Yep.
Yeah.
Yeah. How basically, if you're explaining this to to my audience who doesn't know how to tokenize stuff, who can come up with the idea or something, how people can tokenize stuff like real estate, lands, buildings, or IP.
So, tokenization is taking a real world contract. So, a piece of paper that says that I have ownership rights or some sort of obligation to something, and we are recording that on the blockchain instead, and oftentimes using a smart contract. So, I think a lot of people won't see tokenization happening,
Hmm.
and they will not be responsible for tokenizing directly. It will just happen on the back end, but being recorded with a blockchain as a ledger instead of the current PDF process that we
Hmm.
have now, or e signatures or notaries. So it's a lot less fancy than it sounds, tokenizing ownership of something. If people wanted to get involved with it, it can be quite complicated. You need to have assets that are ready to be
Hmm.
tokenized. You need to have a blockchain in mind. You need to have the software to create the smart contracts on demand. You need to ensure that you understand the regulation, and so that the smart contract ties back to some sort of real world contract or is respected by a court. Because if you just create a token, there's no legal obligation to the item in the real world. So you need to have
Yeah.
all the same terms of a contract in that smart contract, which can get pretty complicated. Then you
Yep.
need
True.
demand and interest. And this is one of the areas that we assist with, because if you create a token and it's a real token, it still needs a price, it needs value. People have to look at it and understand risk. Because if I just see something worth $100, is it going down the next day? Is it going up the next day? What's my risk? Can I exit? If I buy it, am I ever allowed to sell it? These are big questions that have to be asked
Hmm.
and answered. And they have to be answered not just by me taking your word for it, because you can tell me whatever you want. I need to know for sure that there's a framework in place. So these are all things that pioneers in the RWA space should consider. it's it can be a daunting task, but
Hmm.
if you feel that you have a solution in this area that could help more tokenization happen, absolutely pursue it and reach out. I'm happy to consult on the idea.
Sure, guys. If you have anything, just check the description. I have Building INC's Twitter and Matthew's Twitter as well, so you can reach out. So yeah, that will be all then. Um, by the way, this was literally lightning to me and to my audience for real. Like what is RWA and tokenization overall. Thank you so much, Matthew. To joining me in this podcast and being my guest. I really appreciate it. Thank you, Matthew.